Hi, Matt McAleer, Director of Equity Strategies at Cumberland Advisors. December 27th as we close in on the end of 2019. Can't ask for anything more from the broad indexes and really sectors right across the board. Even defensive sectors in this rally are acting well. Utilities, REITs, consumer staples, very broad, very solid rally. So we're pleased getting good performance in the strategies. The risk reward at this point, longer term, appears positive. We've talked about this in the past. When the S&P got through that heavy resistance in the 30-25, call it 30-50 area, that area of resistance starts to act as support on these mild pullbacks. The longer we can stay above that area, the more positive you have to feel going forward. So what concerns us? We're long, have some cash in accounts as we've raised a touch of cash, but what concerns us? Sentiment concerns us, has to. Sentiment's short term, so you can be positive longer term, but it's ignorant to just ignore short term and even intermediate term signals. Equity only put call ratios, we've talked about it before. We follow equity only put call ratios because that's the speculator special. Back in the day, we used to call those speculators Janis Joplins. The Janis Joplin indicator. Busted flat in Baton Rouge. Okay, so how do we use that? Equity only put call ratio under 50 multiple days over the last 15 days. Multiple times over the last 15 days. Cannot ignore that. Just as we talk about equity put call ratios up through 105, 108, we want to be bullish, we want to get capital into the face of speculators. We have to act the same way on the other side. So short term, we would not be surprised to get a better opportunity to put cash to work. Very difficult to get speculative traders, and we call those speculative traders, are the smallest size options traders, along with the small contract equity index futures traders. Important to follow this stuff short term. Doesn't affect our longer term thinking, but short term exits, entries can be important. So that has jumped out at us. We've raised a little bit of cash. We'll look at sectors on pullbacks to put that cash back to work. Over on the bond market, very quiet week as you'd expect. I'll call it 187 on the 10-year. We've traded between that 180 and 195 now for a good month or so. That's a nice range, can keep the equity market healthy. Don't get too carried away thinking higher rates can affect businesses in different sectors and industries. At the same time, these rates are low enough that it adds demand to the equity side because people aren't being compensated on the bond side. So we'll see what the new year brings. I hope everybody liked our videos in 2019. We're trying to improve them. We're trying to cover topics you may not hear every day. If you have anything you'd like us to discuss, shoot us an email or shoot us a comment on YouTube, and feel free to forward these videos to other traders and investors that might find them helpful. Have a great weekend.